All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of Gar Capital. It is Thursday, August 3rd, 2023. Thanks for taking the time out of your day to join me this morning and every morning at 9 a.m. Eastern Standard Time here on the YouTube channel. If you haven't already, make sure to click the subscribe button so you don't miss any of our videos coming up. Good morning, all. All right, let's go and get started. Dow futures down about 74 points, continued weakness overnight. NASDAQ fell as well, about 101 points currently. Pretty ugly at the moment, but we're going to go over everything. I've noticed that when the market is turning bearish or getting bad, or we get a little bit of a pullback, more people tend to watch because they want to kind of get everything in context. So I kind of like these situations because it's important to understand why things happen. Like the Dow, 1972. 10-year Treasury yields did spike. You're at 4.169% currently on the 10-year basis. Bill Ackman said that he was taking a short position, betting that yields go higher on the 30-year Treasury, while Warren Buffett saying that he is buying Treasuries basically every week. Short dated, I'm assuming, because he was saying every month. So that's what came out to what the battle is in terms of fixed income and Treasury debt. We remember yesterday we also had the debt downgrade. People say that's the reason that we had the fall yesterday, but everyone knows on YouTube that we talked about seasonality. First couple of weeks of August tend to be a little choppy, pretty ugly, so none of this is really a surprise to those who are following and watching. Dollar index 102.65, the volatility index 1677, up 4.23%. Crude oil catching a bid with the Saudi voluntary production cuts of about 1 million barrels. That's what it said. I don't know the exact frequency. So again, catching a bid. I was long on crude, but I got stopped out of break even. I was up 100 points. Let that be a lesson to anyone else who trades futures. You see triple digits, just take it. But I really wanted crude oil for you guys to really set the tone for the month. So that's on me. Could have made an extra 100 points. NASDAQ taking a hit. Yeah, I was long that. Again, get a rug pull. Still holding that thing. See if we get to 15,284. That's in terms of support on the NASDAQ. We're going to expand that a little longer here in a bit. But in terms of futures, the good news, at least with futures, is that at least, guys, there's no expiration. There's not a time decay. You just have to have your technicals. Very simple, like Forex. Obviously, you get rug pulls. That happens. How similarly that we had it 3 weeks ago. If you guys remember watching the video, we talked about sometimes it just rains. That was on a Thursday, and we fell, and it was ugly. And then I did a clip and a video regarding resilience when we did the update of the week, and it was an ugly one. I remember Tesla was there, SPY was there, Meta, we got in and it fell. Yeah, ugly week. It just happens. That's just kind of the deal with the market, guys. Just not doesn't go up every single day, and it happens at a time where you have no control. Sometimes, getting that that downgrade happened after the bell on Monday. So you really didn't get a chance to kind of take away any positions or kind of salvage anything. You just got a good old-fashioned rug pull, and that's what happens. That's what I've been really driving home to our members, is the fact that don't change anything. Don't change your risk profile. The second you start going heavy, you get one headline, and then you're absolutely demoralized, and then there goes your month, there goes your quarter, there goes your year. And again, guys, it's a process over time. You're going to get these peaks, you're going to get these valleys. It's no different. It's just like life. If life was perfect and easy, I promise you'd be bored. How do I know that? Because I'm a video gamer, and I'm sure most of you on YouTube have played at least one video game in your guys' life. Has there ever been a video game that you've played and it was really easy or put on an easy mode? It gets boring. You need a little adversity sometimes. You need a little surprise sometimes. Does it happen where we risk money? Yes. Not fun. But that's just the reality of it. You get volatility, and sometimes you get wrong, and sometimes you lose, sometimes you win, and you keep going and move forward. And that's really kind of the process. You got to enjoy the journey, not really the destination, because unless you have an actual goal to hit, whether it's trading every month or every quarter and you're done, which is great. That's a really great way to trade. But some really just are in until they see how much money they can get or how much money they can lose. You don't want to just play the game to play the game either, but you have to accept the rules and the understanding that, hey, sometimes stocks just pull back, and it happens, and you can't do much about it. Gasoline futures are down 0.40%, $2.76. Gold futures, 1967, rejected that 2000 level, down about 0.39%. Again, interesting, the dollar's not up as much, and we have stocks down, and gold is down too. So you're not getting really the hedge effect or protection for your portfolio the way gold is intended to do so, because gold is really pegged on the dollar. That's where it's priced at. When gold starts bidding above 2100, or so, and we're seeing stocks still pull back, that's when you start seeing signals of, okay, people want safety. They want to get into cash. They want to get into safe equivalents. And that's when you would see bond yields go lower. So I'm going to talk about bond yields here in a second. Silver futures down about 1.14% at 23.60 this morning, and copper is up $3.84. We're going to finish up here in terms of Forex land, down 42 pips, pound dollar. Bank of England raised 25 basis points, dollar yen down 69 pips, 142.63. Euro dollar is up about 5 pips, not exactly market moving, barely at 5 pips, not even. Bitcoin flat, 29,235, and then Ethereum 1841. We know our levels, nothing has really changed. So let's answer some questions rather quickly, and then we're going to go over the market action and kind of my thoughts. And I did a post on the blog yesterday regarding the whole market action and kind of explaining it in terms of a macro sense, what happened, why it happened. And then we got it posted on Instagram. So you kind of will get the idea of what I'm talking about in terms of bond yields. And it's important, yes, we talk about TNX all the time. But again, why it's different than what you really think, that's where we're going to go. What's a good price to buy AAP for the long term? Let's go ahead and see it. AAP, the first thing I thought of was AAL. AAL is American Airlines. AAP is Advanced Auto Parts. You could see how much has gone in the past 3 weeks. Here's the problem with auto parts. And again, I think AutoZone and all these other companies, O'Reilly's does well. But Advanced Auto, I don't know if this is just a company specific issue, because I don't know if AutoZone has the exact same price action, and it does not. So AAP, what is the problem with AAP? At least price action wise. I don't have any research on AAP at all. So again, I'm just going to go by charts. What would be a good price that I would want to get in? Again, you're pretty down there. You're at $69. I don't think this is a bad place to get in a stock that obviously you can see everyone hates at this moment in terms of the price action. It'd be a turnaround story like a Target, or like what we talked about with Palantir and all these other these high beta names that got smoked in 2022. Right here around 63 wouldn't be a bad level. That's a retest of the low. How low can you get? You can get as down as 47.87. If that broke, you're talking about 2009 post-financial crash levels. That's a hell of a discount, and you'd be losing about $22 per share. So good way to do this, as always, if you wanted to buy the stock, dollar cost average, so you have a better price over time. It's very interesting to see that AutoZone is outperforming Advanced Auto. It has to be some kind of company specific issue, or if you are buying the stock now, let's say if I was, my thesis would also include a possible takeover bid, where from a different company where they would actually get into this, expand their market share by including advanced retail parts. I'll just float an idea out there. Maybe Amazon does report earnings today after the bell too. Amazon does not have a retail presence when it comes to auto parts. Not saying that would happen, but hey, long shots have happened. Man, remember, they bought Whole Foods. No one thought that was going to happen. So we'll see what Amazon does. Maybe they do, maybe they don't. But I've always said that auto parts and hardware stores like Home Depot and Lowe's, they are basically the only two storefronts or companies or sectors that are Amazon proof. Everything else you can get on Amazon. Groceries, furniture, you name it. But when it comes to like lumber and power tools, likely you're not going to go to Amazon and buy that. You're going to go to the store at Home Depot and get it. So again, that's helped that stock and Lowe's too. But Advanced Auto, interesting. I don't know the market cap here. I don't know if it'd be a possible takeover bid, but there's got to be some news on why this stock has fallen from grace in comparison to AutoZone, which is absolutely outperformed. Or this AstraZeneca, excuse me. That's probably why I have the wrong ticker. Let me see. Was it AutoZone? AZO. That was looking weird. Yeah, it's still outperforming. Look at that. Yeah, since 2009, you're talking about the stock has gone from 200 to around 2,400. What is the fundamental difference between an AutoZone and an Advanced Auto? That's something to look into, Young. So could be some opportunities there if you do your research a little bit. Levels to get in: Goldman Sachs first. And Goldman Sachs is one of my two favorite bank stocks to own. JPM being number one, Jamie Dimon fan over here. And number two to be Goldman Sachs. Goldman Sachs price action, been pretty choppy. Good level to buy in. You're probably looking for a retest right around 321 if you're getting a pullback, which is definitely expected seasonally. Like we talked about with October, we talked about August being choppy. The last 2 weeks of the month tends to be a little better in terms of upside seasonality moves in the S&P. So I put an alert at 321. Again, it hugs that trend line, even though we broke below it, but not a bad price for Goldman Sachs here. Again, I wouldn't lie to you and say that I would hate to buy this stock on the upside because I know where we could go. 370, I'm looking at it here with a little momentum, and if we get a Fed pause, I think that's another level to go ahead and possibly add some more. And I usually don't like adding to the upside unless we're expecting, more huge upside, or I would just play calls. So I'm going to wait for 388.75 to play calls. Maybe I'll wait for 365 possibly because that hits the point of the August highs of 2022. Very similar, 52 weeks, pretty much unchanged. But looking at the stock in general, the trend line here, support wouldn't be a bad idea. I do like Goldman. They're having their issues, obviously. They're not Morgan Stanley at this moment in terms of the price action. Look at Morgan Stanley kind of faring a little better, not as much valleys as Goldman Sachs. Let's see on Tesla here. And Tesla, I do want to buy a Tesla, to be honest. There's a gap to fill that I've been damn waiting for 235.13. Money level to me where, hey, okay, now it's time to start looking at Tesla and really start adding some more to be at 200. $2 per share. I don't know if we're going to get that, though. We would need some really bad news, something to come out with Tesla because Elon Musk has been dodging every single bullet out there, whether it's Twitter turning into X and all the controversies with the self-driving, the crashes and what have you. Obviously, Tesla has kind of been the resilient one, as it should be. It's a great company with amazing margins, and it's the leader, the best in EV, hands down. So I would say around 200 is my money line. I'm still looking for that gap fill at 235. QQQ, a little different, obviously. We broke above the March highs. Yes, we did. Broke above the March highs, consolidating near level that we were back in November, December of 2021. So again, we're kind of we're still below the 20-day, and there is a gap to fill here at around 368.33. Maybe not a bad place if you're looking to short. Not a bad place, but you got to get out same day. You almost have to. Tomorrow is the NFP, non-farm payroll report. We're trading at 372.07, so breaking down here, 368 is not a bad trade because you can see that gap right there. If we get momentum, and again, I have to see how we open. If you're looking to buy more Qs, let's see here. I would say right around this gap fill at 332.85. That'd be a big retrace from back here. So you're talking about another $35 downside. Enough of a dip to really get excited for. You got some crappy price action. Yes, I have calls and I got rug pulled, but in terms of any difference in price action here in the totality of the market, no, it's just chop, unfortunately. Where are the levels that you would buy at in terms of Qs? If you're talking about calls, yeah, you need to get above 385 before we can talk about calls again. Maybe 380 if we're being a little excited. We start seeing a really big volume push. But, 368 is that gap fill. That's basically a retest of Wednesday's breakout. It'd be a full round trip. And again, this dip would be around 3.5%. That's pretty much how much we have risen to the peak back in July. So, just a whole round trip chop. That's all you're getting. Sucks, but that's the reality. Let's talk about the market in general. Let's talk about TNX, is the 10-year Treasury yield. So you can see that a possible retest of 43.33, again, a breakout of this trend line here. Depends how you draw it. Again, you can draw it downward, you can draw it upward. It really depends on your view. And again, my thesis of the year was lower rates. And we got pretty damn close to 3.1, but not enough juice. I think 3.2. I was expecting us to get to 3. Really, the only thing that has changed is that, in my opinion, due to the equity market going so high so quickly, you're talking about one of the better halves of a year throughout history. I mean, talking about 24, 25% on the S&P. That's pretty damn good. You know, that was the last time we had something like that was 2019. So I think the treasury market, it's not an issue of debt. It's not an issue of, money supply. That's contracting. We have a Fed that's being restrictive. I think what I'm seeing in the bond market is that it's hard to justify to buying longer dated treasury yields today when you know you have a Fed that's going to raise next month. So again, yields are basing themselves on one thing at this very moment. Well, two. One is the Fed going to raise again in September? We don't have a meeting in August. So would you buy a bond today at a 25 basis point discount today when you know you're going to get a 20.25% raise in September? Think of it as a savings account. You're going to buy the one with the highest yield, right? That's kind of the deal. You want to make the most money out of your money. So if the Fed paused, these rates are going to fall very quickly because you're not going to get that same high rate again. And again, if the Fed is pausing, more than likely that means that their inflation flight is done. And the only other objective they would have is that if we get some kind of, labor market pullback, more layoffs, credit crunch, credit crisis, bank crisis, then rates would fall. And that's where bond yields start really, really falling. I think this move here in bond yields is more of a testament to the equities market that is doing so well. So there's an equity premium between bonds and stocks. Again, if bonds have high yields, stocks in general, in order to become attractive, have to have a yield to counteract that or be better than. What's going to attract your money? Remember, bonds are less volatile than stocks. So again, you're going to ride that ride that's up and down. You better get paid for it, I assume. You want to get paid either a nice dividend yield or capital return. Last year, these high betas were trash. They all fell. So again, that's high risk. And then this year, Carvana's up like how much percent? Tupperware is up how much percent? Palantir and all these names, Shopify, yada, yada. But yet bond yields still kind of staying within, 400 basis points in between. 4.1 to around 3.7, let's just call it. So about 400 basis points. Again, not exactly enticing. So again, it's really hard to want to buy 10-year treasury bonds, even though they're safe, when you have the S&P around 300 points from all-time highs. It's really hard to justify to investors, it's time to be safe. So if you have a Fed that is still uncertain and you have a rising stock market, yields are going to go higher based on lack of demand. They don't want it. You don't want to hold your cash for 10 years paying 4.175% when you don't know if the Fed's going to raise and then your bonds are going to be lower, or if the Fed pauses, your bond value is going to soar. So again, right now, I see the bond yield market is more of a trade than it is more of a macroeconomic response to the Fitch rating or GDP. GDP is at the expectation of GDP is 3.7% from the Atlanta Fed. That in what universe is that a recession? But I digress. But that's where we are in terms of the market. In terms of yields, in terms of S&P, what does that mean? Well, got a little bit of a blip here. I'm not going to say it doesn't matter. Obviously, it does. You're below the 20. The question is how far can we go, and when will we get there? So 4,500, let's call that our major line in the sand from now on. Below 4,500, 44.28 is in play. That's the 50-day moving average, which kind of comes in line with the idea of what we have, that hey, one more retest in Q3, maybe Fed induced, where we start testing some major moving averages, like the 50-day, possibly the 100-day, but I highly doubt that. But again, there is a gap to fill, but I think that was a contract rollover if I'm mistaken. Cool. You're going to get rising oil prices. We've been trading oil. You get the dead cat bounce on the dollar. The dollar will roll over by the end of the year. And then rates, again, getting a push higher based on demand of that security, not because the world is ending, I'm sorry to say. Now again, all this can change at any moment, as we know, but that's what I see currently. Audio in and out. Oh, I'm so sorry. I don't know what's up with this audio of my stream. So there we go. I hope it recorded. But again, if any questions, worst case, I will go ahead and repeat it tomorrow. So I'm probably going to reset my computer. So my apologies there. I'll go ahead and end the session if my audio is in and out, and we'll go from there. My apologies again. Have a great rest of your day. I'll take a look at what's going on with the computer, and it could be the OBS software, but I'll take a look. Have a great one, guys.